How's everybody doing? Today, I wanted to cover one of my favorite tools to use within um, ICT concepts, whether bullish or bearish, right? My ICT golden pocket. And it's not really, ICT is never called that, but right within this, OTE area, price is super sensitive, right, to reacting off this area and then continuing, right, in a bullish direction and or a bearish direction. Right, when using this fib, I either like to see, right, an accumulation, um, right, and always using time to our advantage and understanding time-based profiles, using, a higher high into a lower low, then to continuous lower. At that point, right, either this retracement, right, and or the continuing retracement, right, if we have a draw on liquidity lower, right, will often be used right here, excuse me, here, are often right here. We'll see price come into our area, right, fail to close above either equilibrium, right, with an IOFED. And I've seen people call IOFEDs, right, multiple things with either, right, having a mohawk or, right, tapping equilibrium or either barely wicking into the fair value gap itself. Um, However you read that institutional order flow, however you call it, you can leave it to, whatever it's called as long as you understand why, when, and where, what is happening. Continuing on, right, from our third retracement right into a accumulation, our second, excuse me, right, we'll see price usually dig a little bit deeper, right, for a manipulation leg into a failure swing, right, with an anticipated failure swing, then spool price to the anticipated draw on liquidity, whether it's a weekly low, monthly low, or whatever it may be. From that point on, right, we use this higher time frame into lower time frame, and right, we can also right put projections off of these. Right, I don't like to use that as much, but you'll usually see ICT either put a I think it's the negative 0.5, and I think it puts it on the lower end, yeah, with that being here, and then also continuing on into a -1, and that would be right under this sell side liquidity level, and then continuing right to our weekly, our daily, or whatever it may be, or whatever right time frame you're using to go ahead and catch your trade. You usually should be aligning all time frames, right, but this is usually right classically how you would like to see it. Continuing on, before we cover our notes and our examples, right, when you see price right, delivering with what seems to be a good market maker model, right, over time we've delivered what seems to be a trend line. However you see it, blah blah blah. Doesn't, I don't really care about the trend line itself, but understanding, right, that higher time frame, this can look like low resistance liquidity as long as we, right, are delivering from our higher time frame PD array below. Continuing, if we have, right, the narrative for this to be a sell side of the curve into a buy side of the curve, that is another factor to add in. And you don't have to turtle soup this low and trust the SMT higher time frame. Also, if we're high time frame bullish, delivering right weekly and daily, bearishly and bullishly, bearishly breaking bullish breakers and breaking new higher highs, higher time frame, and leaving fair value gaps, then just returning for retracements, forming these sell side of the models, also in time-based right manipulations. Continuing on, we see price right here, and we often see right people not know which way it's going to go. If we see right a failure swing here in reaction off of this order block on the other side, right, it doesn't mean we're going to break the low, but we can see a retracement right into, I'm going to take these off because I don't ever use those. We can see a retracement into our golden pocket area, and then a run higher, forming the breaker, right, and past this key high, we usually like to see an expansion, and it doesn't have to break this key high, right? Even coming into the right order block or mitigating this here, into the lower time frame order block, right? It shows that the middle of this is noise and into a reaccumulation, and we don't always have to sweep this low, right? Keep in mind, all we have to do is barely, one, reach into the fair value gap, two, form, right, an SMT at this low, or three, form a balanced price range. If we do sweep the low here, right, we can rebalance and then deliver higher and just continue higher and run and leave this fair value gap open. We can dig a little bit deeper into the fair value gap itself. We also can even dig right into right OTE of this swing high and this swing low, knowing that this low is protected. Knowing one, our market sentiment, our higher time frame, right, bullishness and bearishness into right order flow, as well as the news-based events and how fast or slow we should deliver for the weekly profile as well as the daily profile will help you understand when we should spool price and when price is more likely to accumulate. Right, if this forms Asian into a London, right, with like London sweeping the high or something, and just forming like relative equal highs, you can always see, right, one, New York sweep the Asian low, barely sweep it, close back within the range, and then spool higher, leaving, right, the fair value gap open. Continuing higher, right, we'll see the same type of reaction, right? We can, pull our fib out once again, understanding that we can leave some of the fair value gap open and that we are efficiently delivering price from this low, and this low does not need to be swept anymore. So if we reaccumulate, we often won't see a deep retrace. We can, but we often won't, right? These time-based accumulations warrant no retrace, and we can either dig or lower, right, just a little bit and sweep into the fair value gap, right, or have a quick move higher, react to the breaker, mitigate the breaker, deliver lower very quickly, right, fail to close below, either have another SMT, right, form a balanced price range, right, sweep sell side into buy side, right, we've come into OT of the range, formed a balanced price range. Zoom in just a little bit. We come into our golden pocket, right, then react higher, same thing, then deliver price, right, to our right, higher highs, and then finish out our buy side of the curve. And I'll just go ahead and finish that just so it right, can look good for your notes or right, whatever right you want to leave it on. Right, and it, obviously it's gonna look like this. That's kind of ugly, and I was just trying to finish it, but right, I need to move this as well. Right, usually sell side deliveries are faster. I like to say, right, we'll climb the stairs up and use the elevator to go down, but you'll often see, right, our protected lows, right, with our turtle soup lows into, right, breakers, souping the internals, right, into the higher time frame, right, higher high resistance, and then equal highs up here, retracing, tapping into our zone, failing to close beneath, right, and then delivering very quickly, retracing again, and then delivering once again. We'll always have a kiss of death or right some type of manipulation leg, so even if it's not that big, understand when it doesn't have to be that big and when you can enter yourself in the trade. Hopping over to the notes before we get into some trade examples, right, we have most of this information coming from the ICT OTE primer and as well as the OTE pattern recognition. Of course, I have back testing data as well for this, so, it just comes on top of each other, right? You can use like a year or 2 years of back testing data, right? I have like a lot of chart time anyway. I'm not really like here to like, show that anyway. It's pretty simple using the OTE, right? It's just using the Fibonacci like we saw, and you can incorporate your, your MMXM into your power of 3, which we just saw. And the goal is just to identify the most high probability trades, right, coming back into the range, aligning your technical levels, right, with the market's broader narrative, and aligning your key levels and your key time-based ranges for projected highs and lows, right? Like we said, the ICT OTE primer covers the optimal trade entry as well as the projections that go along with the OTE fib range. Right, and obviously it's not a pattern, but right, the OTE recognition was a reinforcement of the OTE fib pattern, and it's not a pattern that you can like pattern trade. You have to understand the narrative and where we're delivering from, just like he shows in each video. This is pretty much central for this strategy, is focusing on identifying the optimal trade entry within the predefined range of the Fibonacci, right? Coming in at the midpoint, our equilibrium is often critical for support and resistance. It's like if you're using your fib of your order block, right? A 0.5 would usually be more effective, like a mean threshold of an order block than rather a fair value gap per se. A deeper retracement would usually be larger. With these two, honestly, will be usually be on a larger time frame scale, right? Inducing more liquidity into a higher or low, right? Coming into that higher time frame order block, digging a little bit deeper into the range into OT of the order block, and then right delivering higher. You also, right, it's very key to understand, right, which ranges you're fibbing out and why. Right, just for me, right, I like to use it in more time-based ranges, and as well as right when we create that higher high and come back into the range, right? Usually we do leave breakaway gaps, and you have to understand why we do, and why we spool price and why we have those classic buy and sell days, especially into the expansion and distribution phases when there's no real entries. These levels are reinforced by the pattern recognition, which serves as confirmation for trade entries. Additionally, these fib levels are used, right, for projections to take profits, aligning with breaker, not aligning, but you can often align with breaker standard deviations, right, and they're used just, the same. Like we've said a million times, you have to use your narrative. The OT approach is enhanced when it aligns with the broader trading narrative, including your time-based ranges, key market structure points, right? This ensures your entry and exits are not only technically sound, but you're in sync with the market's liquidity pools and the potential manipulation zones and times. Right, a key aspect of this strategy involves anticipating failure swings on the higher time frame, which are often used by the market to manipulate price before moving towards the draw on liquidity. The strategy involves using the fib levels to confirm reversals, specifically watching for failures to close below these levels after a failure swing, which can signal a valid reversal. Price will often have a failure swing high time frame to manipulate, then spool to the draw on liquidity with a time-based narrative. Adding your market maker framework, which is what the market maker framework is, right? After we have a reaccumulation leg 1 or 2, right, we'll often see a retracement inside to the range, often helping identify the reversal higher time frame, with our dig deep into the range, and then our expansion right back into the range and then out of the range. We always use our power of 3 concept, which breaks down the market into phases of AMD, right? Provides the time-based framework that aligns with the OTE approach. By understanding where the market is in a cycle, you can better understand your time-based entries and exits. Combining this with the fib-based levels, it ensures your trades are not only technically precise, but contextually relevant. Right, in a practical application, we'll consider where price approaches a key protected low during the London session, anticipating a manipulation phase. You expect a failure swing that drives price below the 0.68 fib before reversing towards the draw on liquidity, where we entry as price fails below to close below the 0.68 level and signals a reversal. Right, the confirmation is the reversal is confirmed as the price moves above the 0.5 fib level of the new higher high and lower low you have fibbed out, right, with our new range. Right, the exit is right? You project your take profits either using your fib projection or using your key highs and lows, right, or the opposing range order block to still be able to take profit within the range and then hold your runners, right? Use this knowledge and the narrative in our key ranges and time-based ranges into key protected highs and lows, and we'll find we align perfectly within many of our trades, right, diving right into the OTE range. These are strictly like directly from the primer in the pattern recognition, right? We have our swing high and our swing low fibbed out. We see our retracement tap 1, and then retracement tap 2, right? With our exit 1, exit 2. Our drawdown is 2 ticks or $62 with our entry at 177.2, right? We see here, right, 0 ticks of drawdown, or 2 ticks of drawdown, and then here as well, right, we fail to close above the 7.9 level, right, with our higher time frame narrative. Right here as well, right, it's a lot harder to see, but right, we have a big figure, right, reversal into our market maker model. This looks just like the beginning on the S&P. We then get our new swing high or low with our entry right at the yellow line into, right, our expansion into our recumulation, manipulation, distribution higher. I'm sorry if that's a little bit hard to see, right, but you have the small accumulation range into a big expansion after, right, a manipulation wick lower, right, where the bottom of the range is here, and then the high of the range, where we come into OTE, then deliver higher. Coming in to NQ, right, on our chart example for a trade, on the monthly time frame, right, we see the higher time frame turtle soup into the weekly time frame, right, with our expansion manipulation leg lower, turtle souping, and then our draw higher, right? We then form our order block, right, with our higher high and our lower low. I'm so sorry, I keep saying right. Man, it's terrible. We then, right, Jesus. Oh. Oh my God, I'm sorry. We then come back into our range and see we fail to close 0.79. We do turtle soup this low and probably form an SMT, but our higher time frame turtle soup low does not get ran because it is a protected low. We come into the wick and it's very reactive, right? We stay for, I guess, 2 weeks, but higher time frame like monthly, it was just waiting for the new open of the year and then coming into the month. So you will get distortion and time-based accumulations like that. This week there was equal highs and equal lows. You have to understand where and why we're delivering from and just wait, patiently for a confirmed entry, right? CSID. Oh my God, I keep saying it. I don't even know what to do about it. It's bad. Jesus. Coming in on the daily. See we turtle soup, instant reaction higher. Close below, blow higher, right? Equal highs. Turtle soup. It looks like it turtle soups it, to be honest. Hold on, let me make sure. It does. So turtle soups it. Also turtle soups previous week low, maybe month low. December, right? Previous week and month low. And we deliver higher. Form our breaker. CSID here, breaker. What do we see? Oop, wrong way. We come in, barely miss 0.5 of the range. On that one, right, there's not much we can do other than see, right, where and how we're delivering, that we're going to keep delivering bullishly, and that we've closed above and created the breaker. Even if it's just barely like this, we've closed above, created the breaker, and we're going to leave some type of fair value gap open. Even if it's to 0.5, when we start reversing and delivering, right, we can come into that previous swing high and low and find an entry within there. Even within here, right, we see our turtle soup low. I don't know why I keep saying it. What is wrong with me? I know that's so annoying for you guys. I'm trying to fix it. I really am. We see our golden pocket form. boom, delivers right higher. Failure to close 0.68 and 0.67 touches OTE perfectly. Same thing here, new swing high and low. Small accumulation candle. Wicks closes back within the range as well. Delivers and reacts very appropriately into OT of the range. New swing high is created into new swing low. We see another one here. Delivers again. Right, and then why do we see this one big past this swing low into this swing low? Right, we have our higher time frame weekly PD array wick here that we reacted to, as well as on the monthly time frame for our open of March, we see, let me come into the week, sorry. We see our open into our low, turtle souping the Monday week, second low of the week into right third week expansion into fourth week expansion, and our fourth week expansion retracement. Same as you would view the weekly profile. Turtle soup, right, close back within the range. Come in, failure to close, right? Your stop can be below, right, 0.78. And then target all the low resistance liquidity. Even here, you could probably add in, not yet. Oh, I was wrong. Whatever. Either way, right, we'll probably create a new higher high, either come in, not using much time-based trading, it's Monday, so we'll probably sweep that Monday low, to be honest with you. But Monday, could have done the damage for the week, sweeping previous Friday low. Can come back into OTE. And we don't. Go ahead and leave that breakaway gap. We go ahead and soup the high, so I would be out of the position anyway. Take profit would have been hitting, and I definitely would have got filled. Like I said, I put it here at the wick, so not really that big of a deal. Even then, we see us continue chopping around, and not really right. My take profit already hit, so I don't really care at that point. But that's just simply having the understanding of the delivering and OT lower time frame into right seeing these low resistance lows here. Low resistance highs here into your turtle soup, coming back into your fib, reacting here, delivering. Also, right, I added into an Asian candle, so obviously my dumbass should have waited until 6 or 2. In this case, 2 didn't do anything, so there would have been no reason to trade. Coming into 6, right, like I said, Monday would have done the damage. Boom, delivering higher. It's not the most difficult thing in the world. Just got to get your chart time and the confidence within yourself to be able to do this and hold trades like this. Let's go ahead and hop into another example. I was actually finna change over, but I see this big, right, accumulation range. And I want to show when, right, accumulations warrant no retrace. Turtle soup to low, right? This low doesn't have to be taken out. This low doesn't need to be taken out. We have liquidity all the way above this high, right? And, above this high. So there's no reason to deliver lower. Like we saw high time frame, we've already turtle souped, delivered the sequence. So at most, we'll turtle soup this low, accumulate, manipulate, and distribute. Right, higher time frame, it's so much easier to see this. It just takes longer to deliver. Manipulation. And where do we come into? Right, you can do this one or that one. Right, would be our previous, so we do here. Come into our, and for this one, right, obviously we retrace into the order block. We fail to close below. React. Boom. Create equal highs here. Didn't mean to do that. Even then, right, we form equal highs, right? Oh my gosh, I keep saying right. Wick above the high, induce more liquidity into the high. There's no, right, there's no real turtle soup here. We displaced higher, but we didn't displace above the high into a real manipulation, right, like we saw here. At that point, we have a new swing high, new swing low, come into our area, see us delivering higher, and just keep expanding. At that point, like we see, wickless green candle, blasting us higher, delivering buy side of the previous candle, and then our low resistance. Into the turtle soup candle at the high, right, that we didn't deliver that day, retraced a little bit, and then delivered higher, left a little bit of a fair value gap, reaccumulated, inside bar, sweep, deliver higher. Even here, in that small little candle range there. We barely don't see it, but we also see us sweep the equal lows into a high time frame fair value gap, understanding that that high time frame fair value gap after an accumulation warrants, right, no retracement lower. That's one of the biggest key notes for this is, right, we're going to put it in paper. If we accumulate high time frame, it warrants, oops, can't spell. Oh, it's an A, whatever. No retracement. This is a retracement, but a deep retracement. Let me go ahead and put that, make sure, you know. So, same as we see here. Inside bar, sweep, close back into the range, deliver higher. If we come on the 4 hour here, oh, beautiful, London, low a day. See either 6, react off the wick, which it probably will do, and or sweep the low, but I'll probably, right, see a reaction off the wick. Boom. Super simple. We saw the low, freeze, reverse inside the wick, failure to close. In the higher time frame, accumulation, manipulation, distribution, using, right, OTE of your range. Here, right, it's not the, you know, easiest to use, but like we were talking about, no retracement warrants, you know, just how we saw a closure back in the range and then being able to catch our trade. Even here, right, lower time frame wick, close back within the range. You can enter inside of the rejection block and, you know, deliver us higher, right? Rejection block within rejection block. Have your close here, and then your close, right, coming into 6, right, you see even 6, right, we barely miss it, and so you probably could have found an entry right within there, coming into your 7, into your 8, into your 9, right, and even here, right, in expansion days like this, you're not going to stop delivering higher, right, and that 9, you know, 10's either going to soup 9, or we're going to come inside the wick, react off the wick, and deliver higher. And in this case, right, like we saw a little bit more of accumulation, and it waited, right, until the PM session. Even then, right, like we see, following, you know, the actual protocol, because I don't even know if that was a news candle. It could have been, but if it wasn't, you know, it would have made sense why we came back lower and responded lower. Also depends what day of the week and stuff like that. It's Wednesday, so that's why I expected that. But we also see coming in 0.68 and 0.79, and then, right, we know we're going to keep distributing higher. Even on this trade, right, it was one of my best trades of the year so far. Right, we see our turtle soup of the Asian lows into a time-based, right, 330 turtle soup, time-based protected low. Monday has done the damage for the low into the in wall, right, turtle soup low here. And coming into Tuesday, right, we have Monday close above the previous day. So we know, right, we have liquidity above Monday's high. Monday has to hit, right, if we need to go higher or go lower, right, and it becomes our key high, and we wait for a reaction. If we get an expansion into a reaccumulation, probably going to be bullish. If we get, like we did here, right, it's probably going to come into this area here, right, and then deliver lower. Right, because we've turtle suit that key high and not reacted and responded how we, right, accordingly should if we are bullish. Like we saw though, we knew this high had to get taken. So we formed a key protected low and low resistance here into the Asian, London manipulation, classic New York buy. We have the Asian high here and the previous day high. Then we form our range with our fib. We see our reaction on the hourly inside the 4 hour into our 0.68 and our 0.79. Failure to close, rejection block. 3 closes into 4. Oops, sorry, 3 closes into 4. Right, 4 here. And we're able to find an entry and, right, keep our stop below the protected low. I actually, entered twice and then got stopped out, right, break even, then it re-entered, like late, right after we, got more confirmation that we weren't just going to keep chopping around, and then held to this high for like a 6 RR. At that point, I think my, stop was even here because, we've already reacted how we should off a rejection block, and, we should just deliver higher at that point, right, taking partials at the Asian high, and even, right, at these equal highs here, and then I'll let, more of the contracts run to take profit. Even zooming into the 5-minute as well, we see, right, once our swing high is created into our swing low, we see our range into our key, right, 330 low, reacting off the wick, then delivering higher, turtle soup like we just talked about. Coming into the range, right, wick, reactive wick, very, very, see, we flip and even close green into a CSID on the 5-minute, right? These, obviously, excuse me, not a CSID on the 5-minute, but we close above the body, then deliver higher into low resistance and get, right, the accumulation and, right, weird distortion back into the range. We'll get that. So that's why, I always try and enter within, a very discounted price leg. And even here, right, I got hit break even, wherever I entered, probably like somewhere within here or within here. But the re-entry, right, was very, very, confirmed and then entered after the 1-minute CSID, 3-candle model here. Even though it didn't really close back within the range, that was, enough for me with it flipping green and, right, turtle souping, right, this candle body close, coming into the wick, right, reacting the same way it did here. Right, rejection block, lower time frame rejection block, order block sitting within the rejection block that delivers us higher. As we failed to close below 0.68 and then 0.79, right, coming inside of our higher time frame 4-hour rejection block, and we don't stay there for too long. We stay there for like 5-10 minutes and then, right, deliver higher. And then as well, right, into the higher time frame, low resistance, and then, we see as well swing high to swing low, retrace, and even at this point, right, you could use this swing low because reject, turtle soup. These won't get ran, right? If we run these, we're gonna run them at the same time, and or barely come into this one and give some type of sign that we're gonna SMT or something like that. And you see as well, we tap OTE very aggressively, and then deliver higher, not needing a turtle soup this low that's in the breaker, leaving these fair value gaps open.